Before I think about entries, strategies, or rules, I decide whether the market environment even deserves attention. When I read a chart, I'm not seeing random price movement. I'm seeing price move from one area of interest to another. So this video is about how I read that movement, not how I trade it. As you see today, presenting on my screen here is TradingView. I'm pretty sure you're all aware of it, and I'm going to pick an example here that I will clearly explain how I actually read that movement and show you my decision process before I even start trading. My chart of choice this day will be silver, and I'll show you what I do. So this is a silver chart. As you can see, you can look at it at first and it will be very confusing, but as I said, in this chart example silver, this is the 1 hour time frame, actually silver. So you should know that charts come in time frames. Markets come in time frames. So the first thing I do is I zoom out, and this is not the zoom out, not this, because this is zooming out as well. No, I'm not doing that. I get to the higher time frame. That's what I do. So in this case, the higher time frame will be as high as the yearly time frame. Bam, there you go. This helps me see what is really happening with this market over years. What are the major highs, the major lows that the market has? What are the major points of focus that this market has been eyeing for the past? This is the bigger picture that I'm looking at. If I can't understand the bigger picture, I don't move closer. So if I was to read silver right now, I'd say its bigger picture is it has been bullish for months now. Not even months, years even. Because this is a commodity. It has been going up and away. You understand? So that's silver for you. So the next thing I do is now I attach my PD arrays to my chart from the higher time frame, and then what I do is I go lower as I go. So what are my PD arrays? The PD arrays that I'm using are fair value gaps and swing points. So basically, this is what I look at to trade. This is practically my lens. So when I read the market, I mostly focus on where price is relative to PD arrays. So they don't tell me to buy or sell yet. They just tell me how price is interacting and where it may want to rebalance next. So for example, in this case, at this 1 hour, 1 month, no, 1 year time frame, this would be a fair value gap. Of course, I'm going to teach you how to read fair value gaps in the future and make sure you understand them. This also is a fair value gap right here. It's actually forming at the moment. So of course, next video breaks down specifically why and how I enter trades. So stay close to get to see that. Yeah, okay. Another thing that matters to me importantly is the location. So where is price in relation to my PD arrays? So for example, as I've shown you that I trade fair value gaps and swing points. So the red line you're seeing right now is is a swing point. It is a swing high that was broken, and this red box that you're seeing, which I'll just make it green, is a fair value gap. So where is price in relation to this PD arrays? And also this point, I can mark it as a PD array. So where is price in relation to this? Price, you would notice that it's at the middle. This this green line is for price here, so it's at the middle. That would tell you that we are somewhere between, you know, premium and discount. And key thing that you want to notice is you want to be able to buy low and sell high. So the aim or the intention of knowing where my PDRAs are and how do they relate to price is to understand the future process of it. That is to say, not in the essence of prediction, but in the essence that where is it headed towards. So at this point, I know it's in the middle. So for me, if it's in the middle, it's a no for me. I wouldn't want to trade something that's in the middle. But if I took the move, or if I saw that price is at this point here, then it would have been easy for me to trace it or send it all the way to another PDRA. Because one of my rules, which of course you understand in future videos, that I know price moves from one PDRA to another. One thing you have to understand is that I'm not trying to predict. Let me emphasize this. I'm actually not trying to predict direction, because let's be honest, Forex is just a general probability game. Whoever has the best probability, whichever side that has the best probability is the side that you are supposed to take in trading. But in this case, what I'm trying to show you is I'm trying to understand what makes sense in this environment. So looking at silver over the years, it has been at a bullish momentum for a couple years, yeah? So, bam. But would I then buy high, knowing that there's a chance of it to tank? Because over the years, as I said, it has been tanking whenever it reaches a key high. Tanks whenever it reaches a key high. And this is a key high that it has reached. So chances are, probability again, it would tank. But mind you, I haven't even spoken anything about my strategy yet, but this just gives me clarity to what am I going to do. Yeah. So in this case, if I see that I don't understand anything, I do nothing. Doing nothing is a decision as well. A lot of time doing nothing is the correct read. If price is between PDRAs, as in this case, with no clear draw, I wait. Patience isn't a personality trait. It is part of the process. So, lastly, or like a few points to the last, after addressing that this is not good for me, I would focus on things like risk, because risk would also show me if this is good for me or not. Say for example, I know that over the years this has been a bullish trend. It has been going up, yeah, but I can't enter now. That's one, because it's at the middle. Two, how much will I be willing to risk to bet against this move? Because there is already a move right now that is opposing the buy that is happening. So there's a buy that has been happening, and there is a move that is opposing that buy. So this is already risky for me. I want to take. Simple. It's already risky because it's already showing signs of it being in a bad environment. Because a good idea in a bad environment, even though I know that silver will buy eventually, but since the environment is not proper for me, I'd rather wait. So now, simply put, I know that silver has been or will still continue higher. But at the moment, we are facing some sort of bearish resistances right here. So what do I do? Structure supports what I want to do. So if I see that, say, okay, there's this huge bearish retracement happening down, and if I enter a buy here, chances are I'll lose. You understand? But if I wait for a proper setup and, you know, get in later on, chances are I'll win. When I read the markets, I'm not looking for trades. This is how I read the markets actually. Just take it up, higher time frame, and then administer the key structures that I want to see before I even go deeper. Because now what happens is, if I go lower time frames, let's say to the 1 month, so that means each candle represents 1 month, I would now see what is happening. I would see that price is coming into some sort of a bullish monthly fair value gap. So I know, oh, okay, good. So what does that then tell me in the weekly? That tells me in a weekly that we've had 2 weeks. Sorry, it's loading. Yeah, we've had 2 weeks of bearishness since we hit that high, and so forth and so on. So I go lower time frames like that up until I refine the points that I want to use to enter the market, and put aside all the probabilities that will happen, all the bullish probabilities and all the bearish probabilities in place. Of course, this is just an introduction video to a video that I'm going to do next, where I will break down market structure more clearly and how I use it as a tool. Because reading the market isn't just, oh, okay, I'm going to buy now, I'm going to sell now. If you read the market based on what candles look like, you would lose money mostly. Because let's say, for example, you've seen these 3 candles going up and you want to buy, you lose money because the next 5 candles were selling. Or if you sell right here, you lose money eventually because the other candles were buying. So when you read the charts as a whole, you get to understand what do you want to do with an asset like silver, for example. Yeah, of course. So thank you for your time, and hope to see you in the next one.